Welcome to Next to Madison, a podcast to help you live your best life.
Welcome back to another episode of Next to Madison. I am your host, Madison Malloy. Super excited about this episode because it is episode 200. Yes, that is right, 200. And with me today, I have got an author and huge investment personality, CEO, somebody who knows how to make money, has written 3 books about it, and is working on his 4th. His name is Sal Buscemi. He talks a lot about stuff. Again, this is not financial advice. Do your own research. But we talk about everything from how to, start lending, peer-to-peer lending, and you can do it with as little as $25. Just a way to kind of, take based on your risk tolerance that you can kind of start earning some money. We talk about some other side hustles. We talk about what to do with an extra 1,000, 10,000, 50,000, 100,000. We talk about the 7 reasons kind of how most Americans are foolish with their money. We talk about the benefits and downsides of 401ks, all this like good stuff. He's a fun personality. He's a great guy. And so this is definitely a episode to listen to. And I think that every single one of you is going to get something from this that can improve your life. So please listen to it. Don't forget to rate, review, subscribe. The more reviews and ratings we get, the more people that can discover us. And I need it. I need more people to discover us. That would be such a great gift. Also, make sure you, if you haven't got my book or you want to listen to it on Audible, it is now available. So definitely check that out. And what other announcements we got? But episode 200, this is a big celebration, and I am proud to actually say that we have been running every Thursday at 6 a.m. an episode comes out. And since we began on June 6th of 2019, which was the first official date of the show, we have not missed a Thursday. And I couldn't have done it with you loyal listeners that are always coming in and sharing and helping us grow the show. So I am very blessed. I want to give a shout out to our producer, Lynette Dallas, our editor, Brent Katz, and anyone else who is involved that comes in and out. We couldn't have done it without you. So I hope you guys enjoy this, and I promise you're going to get something out of this. So please enjoy, and we'll be right back after this brief message with our guest.
Hey, it's Madison Malloy. I'm excited to announce that my new book, Time to Lighten the Fuck Up, is now available online and in stores. You can pick up your copy today by going to Amazon or barnesandnoble.com. This new book is a humorous self-help guide to help you remove the obstacles that are holding you back so you can take things less seriously and live a more enjoyable life. I'm so excited for you to read it. Now back to the show.
Hey, welcome back. We are with our guest, the amazing Sal Buscemi, who's going to talk to us about finance and getting rich. Again, this is not financial advice. You are encouraged to do your own research, make your own decisions. This is just going to help guide you and educate you in areas of finance, and we're really going to get into the real estate sector. So that being said, Sal, welcome to the show. How are you?
Thank you, Madison. It's a pleasure and a privilege, as always. Thanks for having me.
Yeah, I'm so excited you're here. So one of the main topics we're going to cover today is the 7 reasons how most Americans are foolish with their money. So what would you say the number 1 reason is?
I think it's interesting how you say that. There's a lot of people today, and I know that we discussed this. And one of the things that I think is interesting is that people have been taking advice from people who they don't know. I think it's people are looking for the free advice, and that has always happened. That has always caused issues, if you will, with people, because it's very hard to trust someone who didn't graduate math class in high school talking about a stock or a crypto, right? And as acerbic as that sounds, I think a lot of people now are coming back to it, and they're saying, "Hey, you know what? I think I should be listening to probably some other people as it relates to this who are a little more professional." And we saw this when people were like, evangelizing about Bitcoin, right? I mean, this in 2019, 2020, it was very hard to go to a chiropractor and not have him evangelize to you about Bitcoin. And look where it is today. It looks like there's going to be some government crackdown. A lot of people lost a lot of money. A lot of people, made a lot of money too. But it's the same thing, is that it happens in stocks, and people are going on these anonymous chat rooms with these people who you don't know who they are. pumping these stocks and people are putting their life savings into it. And it really doesn't,
Yeah.
if it seems too fast, I mean, it's the American way has always been, because we're merchants mostly at heart, right? The Americans have been, we started, we're merchants, is to get rich quick. There's always something in our DNA about that. And it's the American DNA. However, I think the pandemic has sort of exacerbated that, where people are just swinging for the fences because the information is so readily available, nobody has to think anymore.
Yeah. No, it is true. And it's kind of like that whole thing that happened in 2021 with the AMC and the GameStop over
Oh
on
my
the Reddit
gosh.
channel.
Oh, sure. I mean, you don't know who's pumping that. I mean, that could be, anyone overseas being paid to do that. It sort of is. It really. I mean, think about it. Like, if you look at what the really wealthy are investing into, it's not that stuff. That's very, very speculative. And when you do speculative things, it's going to cause some financial friction.
Yeah, so I always tell people, I'm like, it's okay to do those things, but just make sure you're okay to lose it. Like pretend it's a
Hmm.
bet on like a game,
Well,
and
I mean, even then, I mean, I think there's been some degeneracy that's come in Madison over the past few years where people are betting it all. Yeah, I mean,
oh yeah.
people like that sage advice, but I can tell you the first way I know that somebody has put too much into an asset class or a stock or whatever is when they say, but I just have a little bit in it. At that point, you know that they bet the farm. And judging from my experiences from 2013, I can tell you that a lot of that money it just vaporized.
Yeah. No, it's always, never put your life savings into something that you don't understand
Mhm.
or you can't tolerate the risk.
Yeah, yeah,
Yeah, it's just
absolutely.
crazy. I mean, you witnessed a lot, especially with, FTX and then the other companies they were involved with that people got hit. I had a little bit of, and it wasn't a lot. I mean, a little bit on in the earn yeah, in the earn account
Okay.
for BlockFi,
Hmm.
so you could earn interest on it. And when FTX happened, and then BlockFi had a collateralized loan with them, and they went under, I'm just thankful it literally wasn't a lot. But at the same time, now I'm filling out paperwork so they can submit it to try to get it back in bankruptcy court.
Yeah, we
So
never got
it's
involved with any of
crazy.
that, thankfully. Never got involved with that. It is crazy, but that's just it is the circle of life, as we see it right now today with interest rates going up, that's always going to blow up a few things. And things that you could get away with when interest rates were low are not the same anymore.
Yeah, no, it's exactly right. So number two, what is the number two reason people are foolish?
The other side of it too is that they're too focused on saving money, and they're too focused on really focusing on what I call the retail investor sushi menu, which is usually like a 60-40 plan. And they
Okay.
don't really go anywhere. They're being stuck there because they have to sit there and they're told for the next 30, 40 years, who knows if they'll live that long, really, that they're going to sit it into a mutual fund account. The problem is when you save money, you can't outsave inflation today, and that's become a problem. And people have to take on some sort of risk, whether that
Mhm.
is a side gig writing books like you and I like to do,
Yeah.
or you writing a whole series. Yeah, I'm not at that point
Yeah.
yet. However, or just anything. It's just very easy to make money today. The other thing too is that you have to start investing into asset classes and actually back it up. You have to start investing in yourself, because if you have a very strong network, Madison, you're going to be able to get into opportunities that many people haven't. And I know you and I have talked in the past about professional sports teams and a book I want to write on professional sports ownership.
Yeah.
But that's a whole level of investment there that the mainstream America does not want, and that's really what middle class has been born and bred to do, is to think is that they have their financial idiosyncrasies that came from their parents, and their parents got it from their depression era parents. And
Hmm.
so there really hasn't been any sort of like expansion of the knowledge base. It's mostly been passed down hearsay, sort of like, old stories, family stories. But when you come to a level of wealth, which is what the people who I work with, they don't look at that. They're not into saving anymore. They have much more. There's no reason for them to save. They just invest, and they invest in the companies that they know are going to grow, but also leave a much more meaningful impact because they can afford to do so. Whereas
Yeah.
the middle class is forced to say they save, save, save. They've been ripped off by low interest rates for about 15 years. They're ripped off again by inflation, which is political. It's a tax on savings.
Hmm.
So they're the ones who are getting absolutely, hit upside the head because they're not getting the returns that they need. They're seeing principal erosion, but in order to offset that, they need to get into other asset classes and learn more about those asset classes. That could help a lot more as far as not only producing income, but it gives them a little bit more control.
So how would one educate themselves and be able to take advantage of these opportunities?
I think, there's many of these. I mean, there's many ways for you to get into it. I think it's just a matter of what is it that you want? Is it something more income focused? Do you want to be a venture capitalist like what I do for full time? Do you want to be a real estate investor? What is it and how do you want to participate as an investor? Do you want to be active or passive? If you're passive, then you're not really going to have a lot of you're not going to have a lot. You're going to have a lot of choices, but if you're active and you're willing to participate more by being more direct and investing alongside some of these companies, you'll see that there's probably going to be a lot more opportunity there as far as returns, depending on who you invest alongside to. And there's other, types of things out there, conventions such as I like using Prosper.com, for example. I was doing that for a little bit. Prosper is a peer-to-peer lending program.
Oh, wow. Okay.
I'm a big lender. Yeah. So Prosper is actually pretty cool. And you can actually get some high returns on it, but that high return comes with some high risk too. So it's a good way to make a little bit of cash flow coming in off of it. I think, when you're trading the stocks today, you have to be cognizant of who's on the other side of the trade. And, how often do not people make a living day trading? And I think that's something, people is not something for everybody, but there's a lot of people who get into it. And if you stick with it, you'll be good with it. I think if you were to look at, learning more about maybe private equity and venture and other things, if you have the money to do so, it would be great because that'll give you much more of a really like a confidence level to
Hmm.
invest into things that you might never have been able to invest into before
Yeah, no,
that
absolutely.
provide those outsized returns that everybody desperately wants.
Yeah, exactly. And there's a lot of obviously it's illegal, but there's a lot of insider trading going on and inside information. You're
Yeah.
never going to stop that. Um,
Well, it's free
but
for politicians, right? I mean, politicians can inside trade all day, right?
that's
But,
why I called Nancy Pelosi my financial advisor.
she is the best hedge fund operator, for a long time, honestly. And
Yeah.
and 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 people I think today they're starting to see that. It's like, why am I sitting on, this 60-40? Like, why do rich people not invest like this? Why are they investing like Nancy Pelosi or something? Interesting, right?
Yeah, no, absolutely.
She makes
So,
money while everybody else gets stuck holding the bag.
well, exactly. And I think it's also goes into uh shifting your mind, obviously educating yourself, but like I
Hmm.
think shifting your mindset around wealth. I feel like people that are saving usually are in a scarcity mindset
Yes,
versus an
absolutely.
abundant mindset. So I
Hmm.
think if you are somebody who's like, oh, I got to just save all this and put it in the bank and I know it's safe and it's not going to go corrupt and I've got a $250,000 insurance policy with
That's a
FDIC and
personal self-esteem issue. That's a personal self-esteem
yes,
issue. That's
right.
not, yeah,
So
that's really what it
it's
is.
you can't get wealthy, I really feel, until you shift that mindset. I was somebody
Yeah.
who lived on that roller coaster. I read about it in my book, and like I was always, I felt like I was always getting by, and it
Yeah.
wasn't until I really shifted into that the opportunities seemed to just be coming out of everywhere.
Yeah.
And so you're going to see more opportunities if you're more in an abundant mindset. Obviously, have
Hmm.
enough to pay your bills and cover your expenses and things of that sort. But that brings
Hmm.
up another question because a lot of people will say, okay, you have your investment portfolios, but you need to have 6 to 9 months of savings in the bank. Should you lose your job or something like that? What is your thought on that?
I don't think it's easy for people to put together 6 to 9 months of savings anymore. I think that was something that could have worked during the 90s, but right now people are just stretched too thin.
Yeah,
I think they're lucky if they get maybe 3 months of savings and stuff. I think that's why America's sort of on edge right now, because when you think of inflation, that's eaten into everything. So you have to
yeah,
discount how far your savings can go. It's not 9 months to a year. I don't know anyone. Honestly, I think it's very difficult for people, even friends I have who have white collar jobs in good places because they have kids and they have everything. They have nothing left over at the end of the month, Madison. And
oh
this
my
is this is
gosh,
this is truth today, and this is what's
it
happening
is.
across America. And it's not, it's very easy for people to say, have six between. Nobody has that. Very, very few people have that. There are demographics that do have that, but that's because they believe in that and they have businesses that throw off cash. But for the people who are mostly middle class people, they're scared because they're basically indebted, frightened, and muted. So they can't really say anything, they can't do anything, and they don't know if they're going to have a job later. That's
Yeah.
the issue.
No, it is true. And it's easier said than done, but sometimes like your friends, when you were saying that, it's like, okay, well, could they really write out a budget and see where they could cut back? It sounds like they might be living right at their means or above their means
Oh, sure.
versus trying to tone down their lifestyle. And I know you're in Miami, and Miami is very known for keeping up with the Joneses, right? It's the old theory that every person that drives a Ferrari in Miami most likely is behind on their mortgage. I've been hearing
Probably.
that for 20 years.
I mean, I don't, where I live now, I was in Las Vegas beforehand doing a lot of distressed real estate coming out of the recession, and we own a lot of real estate out there. And it's that way in Las Vegas, but that's America
Okay.
today. It's very conspicuous consumption. People are not looking
Yeah.
for savings. That generation of the Depression is gone, or bygone eras of almost 100 years ago. So people are, you have the yellow lifestyle here. You only live once, just America in general. People are miserable and they're looking for dopamine anywhere they can get it and legitimacy, and they do that by buying expensive things. Now, we all know that some of them maybe can't afford it, but some people can, and they, that's sort of like how they project their status onto people. I've never driven a Ferrari. I've always had Mercedes, but the point of the matter is that people spend a lot of money because we are a consumer-based nation. I mean, we're a nation of
Yeah.
consumers. We are. And if you look at Madison Avenue, they did a great job of, making us feel bad if we don't have a Gucci belt.
Well, I follow so many like wealth type Instagram accounts, and
Yeah.
and it's so true, and I love it. And it's what's the best way to look poor? Have a Gucci belt, because the super rich are not buying these name brand things
Mhm.
to show their wealth. So
Oh, they have name
always
brand
tried.
things. Trust me, they
Right,
have
you
name
just don't
brand
see
things. But it's,
it.
yeah, yeah. Trust me. Trust me. I manage their portfolios, and they have Nobel Prize winners as co-founders of two of their companies. They have name brand things. They just flex it a little differently, right?
Yeah. Okay.
It's to them because when they start looking at because everybody talks about the deals they're in, and what's the first thing they say is that they're trying to impress someone else. And the wealthy use their assets. Money's meant to be used, not spent. And the point is today, when you're dealing with Americans who are living paycheck to paycheck, they're struggling, they're miserable, so they need anything they can to get that belt.
Uh-huh.
It's a shame, it's shameful, but there are more people who would rather be buried with their designer shoe collection than with their significant other. And this is the commercialism of America. You don't see this in Europe because Americans have become, again, this is going to get me in trouble on your podcast. Americans compared to Europeans do not focus on family. They're very selfish.
Europeans or
No,
Americans?
Americans.
I could
That's
see
why
that.
the birth rate is low and everything comparatively speaking.
Yeah, no, it's true. I think our priorities are definitely ass backwards. I remember I just found out about this. I knew there were sites, but I was in the Hamptons this past summer, and I
Mhm.
noticed we showed up at the Surf Lodge, and it
Oh,
was
yes.
yeah, love that place. But however, for some reason, it was a very young night because I was the oldest woman there, and I'm like, huh? But I noticed that all these young girls were all carrying these super expensive bags.
They
And
didn't buy it.
well, and I'm going, how on earth do they afford this? Or which DICK are they sucking that's paying for it? Or what are they doing? It was blowing my mind because I'm like, are they investing properly? I was trying to figure this out. And then somebody told me, they go, oh, no, no, no. There's a place in New York City where you can actually rent a bag for a
Oh,
weekend.
yeah,
And
yeah.
I thought to myself, holy shit, if you're at a point in your life where you have to rent a Chanel bag or a Hermes bag, or whatever it is, to impress people that you don't know, there is a deeper issue going on, and you need to get to the core of that
It's a
because that is
societal issue.
ridiculous.
It's a it's a societal issue. It's not one person, but there's also we also, I mean, think about it. We invested into a company that does the same thing with jewelry.
What's it called?
So,
What's that one called?
it's called Dazzle Now. And,
Okay,
and so people, you have a lot of people who have a lot of jewelry inventory, and you have a lot of people like millennials who are very conspicuous and they're looking to rent this stuff. So just like Rent the Runway,
true.
you can rent the jewelry. And it wasn't until I went to my college reunion that I noticed that a lot of women who were very pretty, they look kind of awkward in some of these dresses they were wearing. And it was because, you know it when you see it, but I'm like, how, like somebody's wearing a $2,000 Gucci dress. I know that, where did that come from? And then finally a friend of mine told me, oh, well, it's Rent the Runway. You can do anything you want. I'm like, that makes sense. Okay. Because the pieces didn't really come together. You know what I mean? Sort of like,
Yeah.
like you would see like, okay. And you're like, sorry, that doesn't make sense. But anyway, yeah. And that's a function of society today. And that's not going to change because that's ingrained into our DNA. That's really what it is.
Yeah. Yeah. No, it's
We've become very transactional, Madison. Very transactional.
well, and there's so many ways to make money with different
Hmm.
investments and things of that sort. I was on some social media site, and there's a guy that goes around and he'll ask people how much is in their bank account. And who knows if they're telling the truth? First of all, I would never release that information, because why would you set yourself up to get robbed?
Yeah.
Um, and this one woman said, I have, what she said, right now in my checking account, I have $500,000. And I thought, well, that's stupid. You should be investing. That was my first thought. And then he said, what do you do for a living? And this blew my mind. She said, I sell used panties on Sophia Gray. And I thought, what the heck? So I go to Sophia Gray and I sign up. No, I'm just kidding. I didn't sign up, but I was like, this is legit happening right now. People are making money selling pictures of their feet,
Yeah.
selling used garments.
People
And
are
I'm
pulling
like,
value out of everything. Of course. Yes.
it's
Oh, this has been going on
unbelievable.
for years. And Twitter, there are a lot of these women you meet, they're not investors. They are very well branded media owners, and they'll sell anything. Yeah, I mean, we are kind of coming to the point right now with decentralized finance and everything. Anything of value, anything that has anything that's sort of perceived of value, people will sell. And
Yeah.
of course, everybody's, there are perverts out there too, so it makes sense. I've never heard of that site, but um, I mean, if you look at also
It's
OnlyFans
real.
too,
I
right?
looked it
Only
up. I was like, holy shit.
go to Vegas. I mean, I can tell you, even there's some OnlyFans models, I'm sure, in my building complex over here, because when I'm at the pool,
Yeah.
they have like a entourage of photographers, and yeah, they make a lot of money because there's a lot of people who will just gift them things because it makes them feel good. It's sort of a serotonin rush to be able to give to someone, that they appreciate. And that's just human nature. But technology has exacerbated that to the worst, I guess.
Yeah. Seriously. I mean, I think I put a story on Instagram and I'm like, have you made money selling foot photos? If you have, I want to talk to you, because it just blows my mind that there's
How much
people
money did
buying
they
this.
make? How much money did they
Well, that's what
make?
I'm trying to find out. I'm trying to find somebody. And one of my friends reached out and he said, hey, I got a porn star. And I'm like, well, I need a normal everyday
Yeah, no.
citizen. That's what,
Yeah, someone who comes from a work and takes foot photos and sells it online. That's what you want. You don't want someone who professionally, right?
no.
No, you want to know what's grassroots America looking at like right now. And you have
Well,
to understand too that a
it's
lot of people are
crazy.
doing that out of desperation because, the job market has changed. AI is going to ruin more jobs
Yeah.
than perhaps, the technology ever has when you think about it. Chat GDP or GPT, it's all over the
GPT. Yeah.
news. Yeah, it's all over the
So
news.
have you played around with that?
I have a little bit. I don't think it's that deep yet, but I haven't, I played a little bit with it. I like it, but I think it still has a little bit more to go.
Yeah, and you have to put in like keywords. So if you do something and it spits it out, then you can say rewrite this to be more original, and then they can do it. But here, I've seen a lot of videos where people are actually putting in, I don't know if this is going to be a good thing, it could be a danger zone, but they're putting in how to make $2 million. And then ChatGPT is pushing out like a plan. And I don't know how accurate it is, but maybe you should look at that and see kind of what information is being circulated out there. But
I'm
it's
sure it
very
sounds
interesting.
very generic. I'm sure, I'm sure you have to get like three passes before you get somewhere meaty with it, right?
Yeah.
And who knows what'll come up on there? I mean, they could be talking about dealing drugs or selling used panties or whatever. I mean, who knows? Right, Madison? We don't know.
That's hilarious. Oh my gosh. All right. So I want to kind of break down some buckets for everybody that's
Okay,
kind of listening. We've got a very
sure.
diverse, wide range of people that listen to this podcast because it's designed to make you happier, healthier, and wealthier. So you were the wealthier segment. So if somebody has an extra $1,000 laying around, what is your advice to them?
I mean, I would tell them, is that something that they want to risk or is that something that they want to, eventually grow? My whole theory is that with the whole crowdfunding, and President Obama was genius for the Jobs Act, but the problem is it brought in a lot of unqualified entrepreneurs who are too busy watching Shark Tank. And anything that you probably invest into as far as like a startup or something isn't going to be high quality. It's not something I would invest into, if that makes sense.
Okay.
And again, I have no, and this is, there's a lot of peer-to-peer lending platforms out there that people can actually manage the risk and see what it is. And you can actually see real income come in. And one of those is prosper.com that I've been talking about for years. I have no ownership there. I use it. I have an account there. I like it. I don't use it all the time. It's become more like a little hobby, but I did it to train other people how to like make investments into things where there was risk, but how to sort of mitigate that risk. And if you look at those sites where, you're becoming a private lender, it gives you a little bit more of an understanding of how the banks and the real world works, rather than just trying to throw money into something and hoping and praying that, it'll go public. We're not in the public market right now that's prepared to take many companies public. So a lot of these crowd-funded deals are probably dropping like flies right now. So, we're very careful. And one of my rules is the wider an investment opportunity has been made available, the less worthwhile it becomes.
Yeah. Oh, absolutely. So okay, so for that $1,000, if they're willing to risk it,
hmm
what should they should
Yeah,
go
just
into
invest
it?
it into a few $25 loans on prosper.com.
Okay. And then
That's it.
what's the usual kind of turnaround on that?
Well, some of these loans are anywhere between maybe 6 months to 3 years, but you get paid monthly on a payment, which is great. So
And you
you
can do as
actually see
little
the
as
money come
$25?
per loan. Yes,
Oh, that's pretty cool. So I feel like
it is
everyone's
pretty
got an
cool.
extra $25. They could at least play around with it and see.
Well, yeah, if you put in like, let's just say you have $1,000 and you cut that up into, maybe you just do, 10 loans or something at $100. If one goes south, that's not enough to kill you, right?
No. And what's the typical return rate on these loans?
Well, that's interesting because when you look at these loans, they range from anything that you would guess. So if you're a good credit, then that's like maybe 6%. If you're a bad credit, figure you can make like 18 to 20%. And all the people who are looking for the high returns, they eat up the ones with the highest interest rates first, if you notice it. Like there's always like very little left in the, as far as the capacity for these investments, because nobody wants a 6 and they can get an 18 or 19 or maybe even higher, but you also don't know what the risk is behind that person either.
And so is this paid out monthly? Like
hmm
so it just
hmm
goes straight into your account.
It goes straight into your
That's
account,
pretty
and then you can
cool.
flush it into your checking account. hmm
That's
Again, I'm
really
not an
cool.
owner. I'm not, I just like playing with it, but it's really good for people because I think if you're putting thousands of dollars into something that's crowd funded right now, crowd has never been synonymous with smart, right? And I think
Okay.
that's gonna disappear. But this will give you an understanding to watch and see and really discover, because your heart is where your treasure is, right? And
Yeah.
until you put something in there and you're watching it, you're really not going to pay attention.
Hmm. That's cool. I'd never even heard of prosper.com. I think that's awesome.
hmm
So, okay, so that's a cool one. So when you sign up, you can just go through the different loans.
Oh yeah. Yep.
And do they are they for cars, houses?
No, they're mostly people who are looking to refinance credit card debt or as a home improvement loan, and they'll say what it
Okay.
is there. And I actually put together a little loom to show you how to use it, Madison. I'll send it out to you later, but it shows you
I'd
how to
love that.
qualify it so you don't get the losers, the loser deals, and you get the winners. I'll make a note of that for you. All
Oh,
right.
thank you. Okay, well, that's cool. And then what about, let's go into the next bucket, 10K. And again, you guys, I'm talking about 10K, not of your savings should you lose your job and you need that money. I'm talking an extra 10K you want to invest and you don't know
I
what
would
to
do the
do.
same thing. I would keep it.
Okay.
I would do the same Prosper thing. It isn't until you're getting up to like 50 to 100K that you can start making like alternative investments into things,
Okay.
and be taken seriously. And when you get to 50 to 100, then you can probably do some direct private investing into, venture deals, privately held companies, pre-IPO companies, companies before they're going to be purchased.
Yeah.
That is where, the real rubber meets the road here. But anything other than $50,000, you're better off playing in Prosper, because you're gonna make a lot more money there, probably shorter term, and then you can use those returns to invest into other things later.
So when you're talking about these direct investments into like pre-IPO companies,
Mhm.
what are some good platforms that people can look to do
Gosh,
that?
I mean, there's Angel List. There's a few of them right there. Angel List is a good one. There are others that you can Google. And what I would do is I would look for companies that fit the profile of, having a founder that's had multiple exits, having someone that's had a
Okay.
lot of IPOs, having someone that's, sold their company a couple times. That's really what you're looking for because in this business, you're betting on the jockeys, not the horses.
Yeah.
If you compare that to Shark Tank, everybody thinks they have a great idea, but if you look at the people with the idea, they don't have the grit, determination, this, to pull the
Hmm.
deal out. Otherwise, they wouldn't be graveling on national TV for $300,000, right? So I
Yes.
mean, so you don't bet, and the only reason why those guys like invest in these companies is they complement other consumer discretionary businesses that they already have, so you can just plug it in. We deal with only very, very successful and very, very sophisticated investors, and mostly what we call Class A real estate and life science companies and venture. And these are what we call statement assets because it allows our investors to invest into things that they would never be able to invest into with world-class opportunities and sponsors. The one thing I would say, if you are around the mark where you have like $10,000 or something, I'm going to be completely honest with people here, is
Okay.
that people never look at themselves as being an investment, right? And I can remember that I've used personal trainers for years. You look like you've used a personal trainer too, or you might be one. People don't
I'm
invest in
not one,
themselves.
but yeah.
Okay. Okay. No, right. But I think, even when I moved to Miami, your investments are only going to be as good as your network. And if you really want to, hit it to the next level, you have to have a good network. And that network is by joining clubs and, social clubs, whatever it might be, where it's
Yeah.
out of your industry. So if you're a doctor, the last thing you want to do, if you want to be a successful investor, is to join another medical based, you know, mastermind. You want to be with other investors, bigger and smarter than you, and societies and clubs. And I talk about that in my third book, Investing Legacy, is that you're
Okay.
starting to see the ascent of society-based investing again. And that's how early families were made. Back in the day, they would make all these investments into these privately held companies. It actually goes back to, Civil War for a lot of these families, old families that were merchants, and they used all that money to reinvest into real estate and venture. And when you start looking at the world as far as your network as your net worth, things
Yeah.
change. And a lot of people don't look at it that way. And if you really want to be wealthy, you have to be relational sometimes. And you have to go out there and talk to people.
Yeah.
Because a year from now, you might be sharing ideas with each other where that person's coming into your opportunity or otherwise. And that's really where America is today, is that we're a nation of deal makers. A lot of very, very few people know how to do it. But that's part of the entrepreneurial ship, the fuel that drives this economy and the spirit of America.
No, I like that. It is true because you'll see a lot of, very kind of wealthy people will always talk about how they have, they pay for coaches, not just trainers, but like,
Always,
you know,
always.
career coaches. And that's a big thing.
Hmm.
I went to a mastermind last year in Mexico and it changed my entire life. I
Hmm.
went with zero expectations. I literally got invited 3 days and I just jumped on a flight and I went and it was unbelievable. But it wasn't cheap, but it was the best investment I ever made because I
I
met
could tell
people
you,
that were like life changing.
we spend about $100,000 a year in networking events and clubs, and it's a reason. And I can tell you,
Wow.
being in Miami, I'm not a big partier, but I'll go out every night to meet people if it's like a special event or an art show or something like that. I'm just going to go down there. You never know who you're going to meet. And
It's
living
true.
in New York City most of my life, I noticed some of the best relationships I ever made business wise were people who I met at a breakfast meeting at 8 in the morning on a rainy April day when nobody wanted to go there. You stick it out, you go and you meet some great people.
Yeah.
And it's, and those turn into great relationships. And I think people today, probably your listeners, they think that the world's gone more transactional, but more people today, especially like of wealthy people, are looking for that relational. They want the
Yeah.
relation, become
Well,
much more relational.
exactly. And the other saying too that you hear a lot is your show me the five people that you hang out with the most and I'll show you your net worth or your
Yeah.
future.
Hmm.
And it is very true because it goes back to I think that scarcity mindset versus the abundant mindset. So if you're hanging out with a bunch of broke people, well, you're naturally not going, they're going to be talking from a scarcity mindset, which usually is a victim mentality. I don't have enough,
Yeah.
life's too expensive
Yeah.
versus an opportunity
Correct.
conversation. And those are
Yeah.
the circles you need to be in because that's where you're going to kind of find the opportunity.
Hmm.
But
Hmm.
so this is, you're a big finance guy, and let's talk about 401ks.
Hmm.
Okay. The 401k, in my opinion, was ultimately designed for a W-2 employee, which is fine. When you're an entrepreneur, I don't feel necessarily that the 401k is the way to go. I mean, you're really locking your money up, hoping you're going to be alive at that time when you could use it. So what is your opinion? I think it's good to have it, but I also think
I agree
it
with you,
can't
but
be your sole thing. Cannot be your
it
sole.
can't, and it shouldn't be. And the 401k came out as a benefactor of, or a beneficiary rather, of the 1974 RISA Act, where a lot of companies were not doing pensions anymore. They were saying, okay, it's in your lap, you're going to handle this now.
Yeah.
And that gave consumers control within certain guidelines, to stay within, like not take out early withdrawals. However, it seems as though that for, if you're a W-2 employee and you're going to be going to the work every day and you're going to be doing the same thing for the next 30 years, it's perfect. If you're an entrepreneur, it is not elective, I believe, for you to have a 401k until you have a company that's throwing off at least $1 million a year in cash. Until you get to that point, it's really not worth it. And besides, when you're at that point, there's other things that you can invest into that might give you a little bit of a tax hedge, but that's made for the middle class. And it's not made for an entrepreneur, because no
Yeah.
entrepreneur is going to be working, unless they sell their company for something. There's a little bit more behind the scene that's going on, where yes, you can have the 401k. If you have a spouse with a 401k while you're building a business, then that's perfect. And I totally condone that. However, for you, cash strapping yourself and you're not knowing when you're going to get out and having to get hit with a penalty for early withdrawal doesn't make any sense, especially when a lot of entrepreneurs, especially first time entrepreneurs, go through all sorts of liquidity issues.
Yeah. And the other thing too is people, obviously people like it. I'm an entrepreneur, so I've had people run past me like, well, you do obviously do the sole 401k, but there's another one, I forgot what the name was, but you can put up to like 250,000 tax deferred. But
Yeah.
here's the problem. Okay. That's great for today. We know what the tax rate is. We don't know what the tax rate's going to be when you hit that withdrawal age.
Well, the other thing too is that a lot of those programs, they force you into stocks and bonds and mutual funds that have high fees. So the people we work with who are wealthy, they use those terms, but they do a self-directed IRA where they're able to invest in real estate and private equity and venture
I
capital
like
deals,
that.
our
Okay.
deals. And there's a lot of them out there. And if you do a Google search and you do have an IRA of any circumstances, you might want to look into it. I know the owner. He's a great guy, JP Dada of VantageIRAs.com. They treat our investors very well. I don't own anything in the company. I don't, it's just something that a lot of our investors have used, Madison. They're in your time zone in Phoenix there. JP is a great guy and he's built a great business with a great reputation. But even if you have $250,000, you're still putting it into I mean, unless you're doing a self-directed IRA, you're still putting it into the 60/40, the same middle class assets that you don't want to be in the first place. Otherwise, you wouldn't be an entrepreneur, correct?
Yeah. Oh, absolutely.
Yeah.
Yeah. So it's always so interesting. There's just so many different, and it's amazing. I talk to a lot of people who, you know, they work in finance, but they're in they're more of an employee. So they're in the employee mindset. So they're not thinking outside of the box of all these different things they could do. I was talking to a friend of mine who is high up in a finance company. And I said, why don't you have your wife start a side business, like making jewelry? She can just literally make them. It doesn't have, but at least you're going to start getting the write-offs and you can start taking advantage of
Yeah.
those
Not
things. Like,
everybody's meant to be an entrepreneur, though, Madison.
no,
Some
but
people,
like
you
they
can't.
don't think.
Yeah.
And then they get
No, they don't,
angry
because
about
they
the
don't want
tax
to.
code. And I'm like, well, you could take advantage of it, but you chose not to.
It's like, when you go to Miami Beach, it's like, I was down here with the guy the other day. He's like, he's not good with his diet, but every time he takes his shirt off, he's like, ah. I'm like,
Yeah.
next time, don't get the double cheeseburger. I don't know what to tell you, honestly. Yeah, I mean, it's just same thing. Like, I'm never going to drink again. And then all of a sudden, it's like people are, New Year's Eve comes around, that's an excuse. But you have to, yeah, not everybody's born to be an entrepreneur, because it takes a tremendous amount of confidence and discipline to do that, that a lot of people don't want to admit that they don't have, or they feel they don't have.
Yeah, and a lot of risk, and you really
Tremendous amount of
don't
risk.
know how
Yeah.
long it's going to take or how many times you're going to have to pivot to make it work. You know,
Yeah. Hmm.
if I always tell people, I never would have started this if I had known it would take so long. So the point of the story is don't look at the future, just look at what you can get today.
Yeah,
Because if you knew
I
how
agree.
long it would take, you wouldn't start.
Hmm.
So
Yeah,
sometimes it's better
true.
not to know and just to kind
Yeah,
of do it if you're passionate about it. So let's talk about your books because you have 3 books.
sure.
You're working on
Three
your
books.
fourth. So
Uh-huh.
yeah, plug your
I
books.
wrote so, and people who are interested in lending, and the reason why I was talking about Prosper is because I used to buy a lot of defaulted commercial loans and residential loans, and that's my background. In real estate, I've always had a very good track record in that. And the first book I wrote actually skyrocketed to about $1,400 for a paperback. It's called Making the Yield: Hard Money Lending Uncovered. And what that
Wow.
does is allows people to become their own bank by lending out to rehabbers, who you watch on TV, to earn a higher rate of return, secured and insured. And then people are saying after that, how do I become a fund manager? And this is after I finished my second institutional fund, and I was kind of like in an in-between stage. And what I was able to do was I put together a book. It's a red book, and it's called Raising Real Money and the Foundation Guide to Real Estate Fund Managers. It's a handbook for that.
Okay.
Then
Nice.
after my mom passed, I was bored and I decided to see how much I could leverage my network to put together another book. And this is a book that was principally written for women because guys, as we discussed, don't read finance books. They read Instagram and go into meme stocks and ape stock, all these AMC, and they're flipping whatever they can to make a profit. It's part of their identity, right? But the women who read it really took it for they really took it for granted because they understood that there were certain key things that they always knew were there but were never really put on paper, if that makes sense. And
Mm-hmm.
that sort of widened it up. And the name of that book is Investing Legacy: How the Top 1,000th of 1% Invest. Not 1%. Anybody with a W-2 is 1% today. 1,000th of 1%. So these are people who own
Wow.
sports teams, fine art. They have names on the side of the libraries with them, with their names on it, things like that. So we're talking about a different level here. We're not talking about the retail investor level with your 60/40 and your 401k. This is beyond all of that. However, if you're interested to see how it works, I would highly recommend that you go to investinglegacy.com to get a paperback or an audible that I wrote myself, actually, Madison. I'm sorry, I
Wow.
narrated myself. I narrated myself. So yeah, I
Nice.
the book has been very well critically acclaimed, especially in the circles I hang out in. But it also deconstructs a lot of the myths that a lot of people you're never going to hear on CNBC, you're never going to hear on Bloomberg, you're never going to hear on any financial press. Because remember, the advertisers for the financial press are the people who sell you the stocks and the bonds. That's why Jim Cramer's so famous. His calls are terrible.
Oh, I was gonna say,
However,
how is he still
he
on air?
turns. How is he not in the bottom of the Hudson River? Is the
I
whole with cement shoes? Is something I don't understand. But there's a level of showmanship there, and what he does is he keeps people involved in the markets. And every time you trade a stock that he says, somebody's going to make a buck.
oh, I know. It's crazy. And I've had people
Hmm.
say that too. If the mainstream media is talking about it, run,
Yeah, always,
run.
always.
Yeah,
Just
like they're
run. That's
doing
the
it
way
for
it
a
is.
reason.
Yeah, but
Yeah.
if people, we have them all of the books can be found by going to my website, salvatorebuscemi.com.
Okay.
And there's all sorts of other things there, that you free downloads, I think, too. But it'll give you a good, I think, if you're going to start out, you really want to be serious about this and wealth creation. I would start out with the white book first and really get into it
The
because
white
that's
book
sort of
is
going to,
making the yield.
no, it's going to be investing legacy, investing
Oh,
legacy.
that okay. This is
Yeah,
all about the
yeah.
third book.
Yeah,
Okay.
yeah, yeah,
Perfect.
exactly.
Perfect.
So we're going to do that because I think what you're going to see, Madison, is it's going to demystify a lot of the noise that's out, and it really is noise. I wouldn't say fake news, but there's a lot of noise out there because you got to think about it. Today, everybody's after your attention, and people are paying more for your attention today than they were for oil back in the days, right? I mean, that's
Yeah.
really what we're harvesting today is attention, like people back in the 1800s, early 1900s, where we're looking for oil because that was a huge wealth creator at the time. Now it's
Yep.
media, as we were talking about before.
Well, exactly. I'm just pulling your book up on Audible. I just wanted
Sure.
to see it. Yep, it's on Audible. Oh, good. You're in the 4 hour mark. Speaking of
Yes.
money, it's so funny. Do you know what's so funny? I just learned this. Because I just released my audio book, and
Mhm.
it's a shorter book, so it was 2 hours and 48 minutes. And then I was looking, and I called my engineer, and I go, I need to come back to the studio, and we're going to do it behind the scenes for 12 minutes. And he goes, for what? I'm like, because if I get to 3 hours, I double my pay. And he was like,
There you
oh.
go. Yeah.
I'm like, done.
See?
12 minutes. I'm 12 minutes away.
That's great. No, that's really great. You double your pay for 12 minutes, right? 12 minutes is enough to do the behind the scenes. That's
This is
genius.
right.
That's
So I'm
absolutely
going back
genius.
to the studio.
Madison,
Got to think outside the box.
always. That's part of being an entrepreneur today, is making sure that you're thinking outside the box all the time.
Exactly. Okay, well, perfect. You guys pick up Sal's books and also go to his website. Check out that prosper.com. That seems really cool. Again, do your own research. Do not invest more than you can afford to lose. This is not financial advice. This is simply information, and you must do your own research. So, Sal, thank you so much for being here. And
Thank you,
everyone
Madison.
listening, thank you. And we'll see you next time to find out who's next.
Hey, your host here, Madison Malloy. Please make sure to subscribe to the show on all podcast platforms, and please rate and review us on iTunes and Spotify. Also, if you have any questions or comments, you can email us at contact@nexttomadison.com. I thank you again for listening. Bye.